Okay, let's do this deep dive. We've got a stack of sources here today.
Yep, articles, reports, all looking at some pretty big shifts happening right now.
Right, in the crypto and digital asset space. And our goal, really, is to cut through all that noise
Zero in on what's actually important.
and figure out what these developments, what they really mean for you.
Exactly. And looking across these sources, two big things jump out, I think.
Okay.
First, how traditional finance is, well, it's really starting to engage properly with crypto, not just watching anymore.
Engaging.
And second, how the rules, the regulations are maybe starting to take shape, especially in key markets.
Feels like things are really moving, maybe even hitting some kind of turning point.
Could be, yeah, an inflection point. And speaking of big moves, Circle. That's the first thing from the sources.
Yes, Circle, issuer of USDC. They just wrapped up their IPO.
And pulled in a lot of cash, $1.1 billion, selling shares at $31.
Which puts their valuation around, what, $7 billion? $7 billion. That's a serious number for a stablecoin company.
It really is. What does that signal, do you think?
Well, obviously confidence in Circle itself, but I think it's bigger. It's confidence in, like, the role of stablecoins.
As the bridge between TradFi and crypto.
Exactly that bridge. I mean, USDC has handled, what, over $25 trillion in transactions? Something like that.
Wow.
So an IPO like this, it really validates that whole infrastructure piece.
So mainstream investors are basically saying, okay, this digital asset plumbing is real, it's investable.
Seems that way. But, as the industry gets bigger, regulation becomes even more critical.
And the sources point to some shifts there too, right? Particularly in the U.S. with the SEC.
Yeah, the new SEC Chair Paul Atkins. The reporting suggests he's signaling maybe a different approach.
Different how?
Moving towards more structured public rulemaking for crypto. A bit of a shift, perhaps, from relying so heavily on, enforcement actions.
Okay, more public rulemaking. Why is that important? Does it just change the process or?
Well, for the companies in this space, it could mean clearer rules of the road, less ambiguity.
Less guesswork. But does public always mean better or clear in the end? Or just a different kind of fight?
That's the million-dollar question, isn't it? The hope is definitely for a more predictable environment, something that, helps innovation but also protects investors.
Okay, and connecting that to institutions. Look at JPMorgan.
Right. The sources say they're planning to accept Bitcoin and even some crypto ETFs as collateral for loans.
Whoa, JPMorgan accepting crypto collateral. That feels pretty major.
It really does. It's a significant shift in how a giant bank like that sees these assets, recognizing their value, basically.
Moving beyond just observing, like you said, to actually integrating them.
Absolutely. And if they pilot this successfully, it really lends legitimacy. It could push other big players to treat crypto more like a standard asset class for lending purposes.
Paving the way. Okay, let's shift gears. Go global. South Korea comes up in the sources.
Yeah, South Korea is making some very deliberate pro-crypto moves, it seems.
With their new president, Lee Jae-myung.
Exactly. The plan mentioned is to actually legalize crypto ETFs there and develop a stablecoin pegged to the Korean one.
Legalizing ETFs, that opens the door for more mainstream investors, right? Using products they already know.
Definitely. And the one-peg stablecoin, that's a clear signal they want to be a leader in this space. Could be huge for payments, trade, who knows?
It's a strong policy direction, positioning themselves deliberately.
It really sets a marker down for other countries thinking about how to approach crypto constructively.
Okay, one more piece here, the trading side. Binance.
Right, Binance. They've launched a new liquidity program specifically for altcoins.
Altcoins only. What's the goal there?
To boost liquidity for smaller assets, they're offering rebates, like up to 1 basis point, to smaller market makers on, I think, 18 USDT pairs.
So trying to make it easier and cheaper to trade those lesser-known coins.
Exactly. Better liquidity means tighter spreads, more efficient trading. It helps those altcoins get more visibility, maybe encourages adoption.
Makes the whole market more dynamic, especially for emerging projects.
So yeah, if you sort of step back and look at all these pieces.
You've got the Circle IPO showing infrastructure validation.
The SEC potentially moving towards clearer rules.
JPMorgan treating crypto as actual collateral.
South Korea actively building a crypto-friendly framework.
And Binance trying to deepen liquidity for altcoins.
It all points in one direction, really. Digital assets getting more and more tangled up with traditional finance.
Institutions are definitely leaning in. And the regulatory side, while still messy, seems to be moving towards, well, something clearer, hopefully.
Which brings us to the big final thought. for you listening.
Right. With all this momentum, this integration happening.
How much closer are we really to seeing digital assets become just a normal, accessible part of your everyday financial life?
Something to think about as these trends keep playing out.